Okay. So Meta is currently sitting at $638.64 a share. Over the past 5 days, it's down 5.16%. Over the past month, it's up 3.15%. Over the past 6 months, it's down 16.63%. Year to date, it's down 3.08%. Over the past year, it's down 10.69%. Over the past 5 years, it's up 144.6%. All-time chart goes back to May 18th, 2012. And it's up 1,573.48% since then. Pretty cool. Meta is pretty sweet with their balance sheet, their dividend, everything. Pretty cool. Pretty good. Maybe someday I'll do like my favorite stocks of all times or something, you know? We're not at that point yet, alright? We're not at that point yet. Alright. Meta Platforms rose significantly in the past month, driven by strong Q4 earnings beat and upbeat Q1 revenue guidance. Analysts project continued growth for the next quarter, supported by AI investments and a healthy core ad business, despite some looming regulatory hurdles. The bullish view. Strong earnings and upbeat guidance. Meta reported Q4 2025 EPS of $8.88 and revenue of $59.9 billion, both exceeding analyst expectations. The company also issued Q1 2026 revenue guidance of $53.5 billion to $56.5 billion, well above consensus estimates, signaling durable ad market recovery. Aggressive AI investment strategy. The company significantly increased its 2026 capital expenditure guidance to approximately $115 billion to $135 billion to support its AI build-out, which the market views positively as essential for future growth and competition in the AI space. Positive analyst sentiment and price targets. Wall Street analysts hold a strong buy consensus rating on Meta. The average 12-month price target is approximately $852, representing a potential upside of over 30% from the current price, with several firms raising their targets recently. Increased operating expenses. While the core business is strong, the significant increase in capital expenditures for AI is driving up total 2026 expenses to a projected range of $162 billion to $169 billion, a factor that could pressure future operating margins. Renewed antitrust scrutiny. The U.S. Federal Trade Commission, FTC, is appealing a prior ruling that dismissed its antitrust lawsuit regarding the Instagram and WhatsApp acquisitions, reintroducing a significant legal uncertainty and the potential risk of divestiture. Ongoing regulatory and legal challenges. Meta faces additional legal issues, including a lawsuit from the New Mexico Attorney General concerning child safety and scrutiny from the European Commission over ad prices, which adds to the overall regulatory headwinds. Okay. It's got that dividend of 0.33%, quarterly dividend of 52 cents, PE ratio of 22.11, 52-week high of $796.25, 52-week low of $479.80, and an EPS of $28.94, with 219 billion shares outstanding and 79,000 employees. I'll read this article. Can Meta platforms sustain growth in an age of AI and social media saturation? Uh-oh. I heard something. Somebody's out there doing something. Alright. Meta stock remains a major player in the technology sector. This article explores Meta platforms. Oh my god, it's time to go to bed. Alright. Explores Meta Platform's business model, advertising dominance, AI strategy, risks, and long-term stock outlook for investors. There's a cool graphic there. And this is by Hammond Nawaz, 40 minutes ago. Introduction. Metastock has experienced dramatic shifts in investor sentiment over the past few years, from rapid growth driven by social media dominance to sharp pullbacks during periods of heavy spending. Meta Platforms Incorporated has remained at the center of the technology investment conversation. As the company behind some of the world's most widely used digital platforms, Meta continues to influence how billions of people connect, communicate, and consume content online. Meta's core business and revenue model. Meta's primary source of revenue is digital advertising. The company operates a portfolio of social media and communication platforms that attract massive daily user engagement. This scale allows Meta to offer advertisers highly targeted marketing solutions, making its ad inventory extremely valuable. Advertising revenue benefits from Meta's deep user data and advanced algorithms, which help businesses reach specific audiences efficiently. This data-driven approach has historically delivered strong returns for advertisers, reinforcing Meta's position as a leader in the digital advertising market and supporting long-term interest in Meta stock. All right. Financial performance and profitability. Meta's financial performance demonstrates the power of its business model. The company has consistently generated substantial revenue and operating cash flow, even during periods of increased investment spending. Strong profitability provides Meta with the financial flexibility to invest in emerging technologies while continuing to return value to shareholders. Cost discipline has become an increasing focus for management. Efforts to streamline operations and prioritize efficiency have improved margins, which has positively influenced investor confidence in Metastock. Artificial intelligence as a growth driver. Artificial intelligence has become central to Meta's future strategy. The company is integrating AI across its advertising systems, content recommendation engines, and user experience. These enhancements improve engagement and ad performance, directly supporting revenue growth. AI also plays a role in Meta's long-term vision beyond advertising. By improving personalization and automation, AI helps Meta scale its platforms more efficiently. For investors, AI adoption strengthens the argument that Meta stock can continue evolving alongside technological trends. Long-term vision and platform expansion. Meta's long-term vision extends beyond traditional social media. The company has invested heavily in next-generation digital experiences, aiming to shape how people interact in virtual environments. While these investments require significant capital, they also represent the potential future revenue streams that could redefine Meta's growth trajectory. Global expansion remains another key opportunity. Emerging markets continue to add new users, increasing Meta's advertising reach. Even as user growth slows in developed markets, monetization improvements can still drive revenue growth. Competitive landscape and industry challenges. The digital advertising space is highly competitive, with numerous platforms vying for advertiser budgets. Changing privacy regulations and platform policies have also altered how data can be used for ad targeting, creating challenges for Meta's advertising efficiency. Despite these headwinds, Meta's scale and data capabilities provide a strong competitive advantage. Its ability to adapt advertising tools and measurement systems helps maintain its relevance in a rapidly evolving digital ecosystem. Risks facing Meta stock. Meta stock carries several risks that investors should consider. Regulatory scrutiny remains a significant concern, particularly around data privacy, competition, and content moderation. Any favorable regulatory outcomes could impact advertising prices or increase compliance costs. Another risk lies in shifting consumer behavior. User preferences evolve quickly, and new platforms can emerge unexpectedly. Meta must continuously innovate to retain user engagement and prevent audience fragmentation. Heavy investment in long-term initiatives also introduces execution risk. While these projects offer potential upside, they may take years to generate meaningful returns. Valuation and investor sentiment. Meta stock valuation reflects both its strong cash-generating ability and uncertainty around future growth initiatives. Investors often weigh the stability of the advertising business against the risks associated with long-term investments and regulatory challenges. Market sentiment toward Meta can change rapidly based on earnings results, user growth metrics, and progress in AI-driven monetization. This makes the stock attractive to investors who are comfortable with periodic volatility. Long-term outlook for Meta investors. From a long-term perspective, Meta stock remains a compelling investment for those seeking exposure to digital advertising and AI-driven platforms. The company's unmatched scale, strong financial position, and focus on innovation provide a solid foundation for future growth. While challenges remain, Meta's ability to adapt its business model suggests it can continue generating value for shareholders. For investors with a long-term horizon, Meta stock offers a blend of stability and growth potentially in an increasingly digital world. So this guy's a fan of Meta. He likes Meta, huh? Should we leave him a comment? Maybe we can like it. Oh, we gotta sign in. No. Alright. Okay. Meta. So that guy likes it. I mean, come on, Meta. It's freaking... What is it? $28.94 EPS. Come on, bro. It's It's Meta we're talking about here. Let's look at the earnings. Let's look at Meta's earnings. So they reported... Yeah, they reported January 28th, 2026. Gosh, time flies when life's lifing you as hard as it can, as hard as you can take it. Gosh. Necessity breeds innovation, huh? We wouldn't be here without it. Whew. Okay. Meta reported earnings on January 28th, 2026. Very cool. They beat on EPS. They were predicted to have $8.18. They got $8.88. I was reading that funny for some reason. It's a plus 8.6% beat. Okay. Revenue estimate, they beat by 2.43%. They were estimated at 58.47 billion. They got 49.89 billion. Very good. All right. Let's see if we can learn anything from the financials. So the revenue is increasing. The net income look at that one. September 25th, or 2025. So they've steadily increased R&D by a considerable percentage. Increased expenses by about you could say between like 50 and 100 billion. They're steadily increasing. Increasing operating income as well. So check this out. Check that out. The net income for and the net profit margin what time was this? September 25th or 2025. Let's ask Gemini. All right. Meta's net profit margin for the quarter ending September 30th, 2025 appeared significantly lower due to a one-time non-cash tax charge. While the company's core business performance remained robust, this accounting event caused a massive 83% drop in reported GAAP net income. Yeah. The one-time tax hit. The primary culprit was a $15.93 billion income tax charge related to the implementation of the One Big Beautiful Bill. Impact on margin. This charge pushed Meta's reported effective tax for the quarter to a staggering 87% compared to just 12% in the same quarter the previous year. Reported versus adjusted. Reported net income, $2.71 billion. Adjusted, if it was normalized, if they didn't have that tax thing happen, would have been $18.64 billion. The amount it would have... Okay. Reported net margin, approximately 5.3%. Adjusted net margin, about 36%. Massive AI infrastructure spending. Beyond the tax charge, Meta's underlying margins face pressure from its aggressive pivot into the artificial intelligence. Capital expenditures. Meta's CapEx reached $19.4 billion in Q3 2025 alone, nearly double what it spent in the same period 2024. Operational costs. Total costs and expenses rose 32% year over year to $30.7 billion. This was driven by the Meta Superintelligence Labs initiative, which required expensive technical talent and massive investments in data centers and hardware like NVIDIA H100s and H200s. Reality Labs losses. The Reality Labs division, responsible for the metaverse and AR/VR hardware, continued to be a significant drag on overall profitability. The segment reported an operating loss of $4.4 billion for the quarter. While sales of Ray-Ban Meta smart glasses were strong, the division's heavy R&D costs meant it remained deep in the red. You got a little graphic here of the revenue and net income, net profit margin, effective tax rate. Went up to 87%. That's pretty much the cause of it, obviously. If you look at the adjusted margin of about 36%, you can see it is still lower than the 38.7% from 2024. This reflects the real-world costs of building out AI infrastructure, which Meta warned would continue to put upward pressure on expenses through 2026. Okay. So if you're looking at their numbers and thinking, why is it got that strange net income number, that's because of the big one-time tax thing that they had to pay. So, pretty cool. I like Meta a lot. Let me know in the comments if you like Meta or if you think it's going to go down, if you think it's going to go to zero. What do you think? Let's look at Polymarket. And I think we're going to be done for today.